Donald Trump is set to accept the Republican nomination tonight, but what would a second term mean for markets? Welcome to Market Insight. I'm Elena Casas. 5 days after narrowly escaping an assassination attempt, Donald Trump will accept the presidential nomination at the RNC this evening, as incumbent Joe Biden faces growing calls from his own side to pull out of the race. Markets are already moving to price in a second Trump term. On Wednesday, the chip sector lost more than $500 billion in market value after Trump told an interviewer that major chip producer Taiwan should pay the US for its protection. Well, joining me now to talk about what a Trump victory could mean is Brian Krawez, president of Scharf Investments. Welcome, Brian. Can we start then with the chip question? The recent AI boom has been heavily reliant on chips made in Taiwan, but what could a second Trump term mean for that sector?
I mean, you've heard, Trump, as you mentioned earlier, Taiwan, talking about not defending Taiwan. He's also talking about tariffs. You've also heard from the Biden administration some similar things in terms of protecting U.S. proprietary rights. So a second Trump term is probably going to be even more aggressive versus China. And ultimately, it could be good for certain companies like Samsung that are not in Taiwan. Generally speaking, Trump could be problematic for some of the tech leaders that have been really powering the market this year.
What about the consequences for US tech giants like Apple, who manufacture a lot of their products in China?
That's a real good question. There's a couple effects of a potential Trump policy. Number one is actually, people haven't really been talking about this, but J.D. Vance has actually been an advocate of breaking up companies like Google. So regulatory pressures on big tech won't necessarily go away, even though people are thinking that Trump is more a deregulatory guy. And then in terms of manufacturing, certainly tariffs will make it harder for manufacturing, not only in China, but in other places. And also tariffs going both ways could be very detrimental, particularly to names like Apple, Nike, Starbucks, who are dependent on selling a lot in China. And there'll certainly be retaliatory tariffs going both ways. So I think investors should be a little bit cautious on names that are really dependent on China for their sales, not only just their manufacturing.
More broadly on trade, he has promised higher tariffs not only on China but on a broad range of countries. Is that good news for US manufacturers, or could it simply be inflationary?
Probably both, actually. We think that inflation will be higher under a Trump term, and that could hurt multiples generally, but more specifically should actually help value stocks. We've taken a look at when interest rates are above 4% on the 10-year. Actually, value stocks tend to outperform. And when interest rates are below 3%, growth stocks tend to outperform. So it should be good for value stocks, and then specifically U.S. manufacturers. We think it'll also be good for companies like Gentex that are manufacturing in the U.S. But there'll also be some winners and losers out of those tariffs.
You predicted there higher rates under a Trump term. Is the potential that he could win in November causing a headache now for the Fed, do you think?
Well, the Fed is really focused on the here and the now. I think they're still charging towards rate cuts because you've got inflation coming down at the moment, and you've got the potential for a recession coming down the road. So anything that happens with Trump will be more down the road, and the Fed will have to deal with it at that time. But right now, we're probably still headed towards some rate cuts in the near term.
What do you think it could mean, the election of Trump, for the bond market, since he's promising lower taxes, which could mean higher US debt?
We think that for the bond market, rates right now, 10 years around 4.15. I hear a lot of people say, well, that's high. But really, investors have been sort of colored by the last 15 years when rates were abnormally low. So our bet is that rates should be much higher in the next 15 years than they have been in the past 15 years. And particularly if Trump wins, there's a high likelihood that rates will be higher. And obviously with bonds, you're talking about longer term bonds, higher rates mean lower prices. So we'd be a little cautious about going too far out on the duration curve, even though the Fed could be cutting rates in the near term. If you go too far out, longer term, you could be hurt by higher rates.
Moving back to equities, what stocks do you think could benefit from a second Trump term?
Well, I mentioned U.S. manufacturers like a company like Gentex. Actually, if you're thinking about on the chip side, there's a company like Samsung. We also think reduced regulations on U.S. drilling can help companies with high exposure to U.S. oil and natural gas. Names such as Occidental Petroleum. And his pick, J.D. Vance, sponsored the Affordable Connectivity Program Extension Act. That'll actually be helpful for high-speed internet providers such as Comcast. So, in addition to U.S. manufacturers, drillers, there's some, idiosyncratic names that could also benefit that investors need to kind of think through.
Brian Krawez of Scharf Investments, thank you so much for joining us. Well, that's your market insight. Don't forget, you can watch more videos on Reuters.com.